Hello everyone, welcome to ixamBee. In this video, I am going to continue the discussion about economic survey. In the first part, if you have missed the video, you will find the link in the description box. In the first video, we had covered the overall theme and the state of the economy that has been covered in the first chapter of the economic survey. In this, I will discuss a few important chapters, not all the chapters, but few important chapters, and how you can pick out conceptual understanding of topics for your upcoming exams like SEBI and for exams like RBI. Right. So to continue with the state of the economy, overall underlying theme of the agile approach being used by the government, there are certain supply side reforms that the government has also resorted to support the economy in the wake of COVID-19. These supply side reforms were structured around two themes. First being the reforms that improve flexibility and innovation. Here in this category, reforms related to the factor markets, the deregulation of certain sectors, for example, the telecom sector. There were a lot of points or regulations, deregulations that was done for that sector. Similarly, the privatization policy and the monetization plan of the government will help on improving the supply side in the support from the supply side to the economy. The second theme around which the supply side strategy of the government was structured was to improve the resilience, right? So that the Indian economy, if you remember from the last economic survey also, resilience was also highlighted there also, that it is important that the economy is resilient also. So here the long-term approaches like the climate related and the social infrastructure related steps that the government has taken are also highlighted in few of the chapters going ahead in the economic survey. So as I said, a few of the important chapters will be discussing in this particular video. First being the fiscal development. So how has the fiscal of the government, fiscal basically relates to the revenue, the receipts and the expenses of the government. So how has that really developed? Right, so a lot of fiscal support, we know that the government last year had to give a lot of fiscal support to the economy, and also because of the health response that had to be given again because of COVID-19. This has led to some increase in the government debt and the fiscal deficit. However, the government now believes that there will be a decline in the trajectory of the government debt in the coming years. This is because of the rebound that they have seen in the government revenues that has been there. So if we look at some of the key points that have been highlighted in the economic survey, it shows that the revenue receipts have gone up by 67.2%. So revenue receipts, if we are talking about for the government, these revenue receipts can be tax revenue receipts and non-tax. Right, so tax basically will include your direct taxes like the income tax and the corporate tax, and the indirect taxes like GST. And non-tax revenues is like the dividend incomes, the interest incomes that the government gets, and also the surplus transfer that RBI does to the government is also a kind of non-tax revenue receipt for the government. So if we are talking about the tax revenue, this has also registered a good growth of 50%. And on the other side, if you're talking about the expenses have been grown up by 13.5%, and this is what they have highlighted as the capital expenditure. So if we talk about the expenditure policy that the government has followed, which they have discussed in the economic survey, they have highlighted that the expenditure policy of the government has been characterized by restructuring and prioritization of spending in the sectors that have a long-term impact, right? So long-term impact, mostly if we see that the growth in the capital expenditure has been much higher than the revenue expenditure which the government has done. Again, why? Because the government is stating that the priority here was that the capital expenditure, because has a long-term impact in the economy. So it will help to sustain growth in the following years for a much longer period. So that is what the government has followed. And fiscal deficit also. So we had for this year 2022, last year the budget had estimated a 6.8% of fiscal deficit. So later today the budget will also be coming out, and where they will tell about the revised estimates and also the fiscal deficit estimates for the next year. But as of now, the fiscal deficit, based on this, the government has contained it at 46%. What this means is, for the full year, whatever is the absolute amount of fiscal deficit, the government has spent only 46.2%. So they are well within their estimations and are less likely to exceed this 6.8% of fiscal deficit as was estimated. So these are some of the points that have been brought out in the fiscal development chapter. Another point is about the central government debt. So what this fiscal deficit is, basically how is it being financed? It is being financed by the debt that the government is taking. Now this can be the public debt or the debt because of the public account, which is mostly the savings, the small scheme savings which the citizens do. Right. So if you're talking about the debt trend of the central government, the debt to GDP ratio has seen an increase. But again, the government is looking to bring it down, and of course there are reasons because why they have gone up, because of the various expenses that the government had to meet because of COVID, and there was a shrinkage to a large extent last year because of COVID in the receipts, which was led to an increase in the debt to GDP ratio in 2021, right? So this is for 2021, which shot up to 59.3%. However, the government is now looking to increase the public, the investor profile in the public debt. So public debt as of now, which consists of, investments in the G-Secs of the government, the various bonds which the government comes out with, the investments here, the money here lent is basically invested by the banks and financial institutions. So they're looking to, delve into and bring in more participation from the retail. So you would have heard before about a retail direct scheme, right? So this retail direct scheme is where an individual, a retail investor, can actually directly open an account with RBI to make investments in the government securities market. So this will help to broad base the investors in the government securities market. Another unrelated news to the economic survey that came out on 31st January itself was a conversion transaction that was going to take place for some government securities and oil bonds with RBI. And these bonds, basically G-Secs and oil bonds, are going to mature over the next 3 years. Okay, so over the next 3 years they are due for maturity, and in a first of its kind conversion transaction, what is going to happen is the RBI is going to convert them into longer term G-Secs, right? So it will be a cash neutral transaction, but it saves the government from the cash outlay because of the maturity of these bonds and G-Secs that were due for maturity over the next 3 years. And the size of this is approximately 1.2 lakh crore, right? So there are certain techniques which the government is using to manage the debt and to also get a wider participation of different kind of investors in the GSEC market. So this is another point that is I think we should highlight and we should take into consideration when we are reading about the fiscal development. Another interesting chapter is related to the monetary management, which is basically the money supply, the monetary policies and the money supply in the economy. So as we all might be aware that RBI has been continuing with the accommodative monetary policy from quite long. If you do not know, you should be very much aware about the repo rate, the reverse repo rate, what they are, what they mean, terms like LTRO, TLTRO, for your upcoming exams. Also, what is MSF, right? So rates, these are certain monetary instruments or rates which you should be aware about, and also their meaning for the upcoming exam. So accommodative monetary policy has been continued by RBI, and also a lot of regulatory support was also provided by RBI to support the economy. So the fiscal policy and the monetary policy both had worked together to support the economy, right? What the economic service also highlighted, that the reserve money growth did not fully translate into and commensurate broad money supply growth due to smaller money multiplier effect, right? So there are few terms that you should be very much conceptually clear. Money multiplier, what is meant by money multiplier? What is reserve money? So there are certain monetary aggregates which are used to define the monetary supply. Reserve money is more commonly the base money or given by M0. Similarly, broad money is also given by M3, right? So what does M0 means? What is M3? What is the difference between them? So these conceptual understanding can be a part of your, anyways it's a part of the economics syllabus for SEBI exam, RBI exam, and you should have these clarity here. Okay. Some other key points that have been highlighted in the monetary management chapter is related to the bank credit growth. So the bank credit growth has started to pick towards the later half of the year and reached a 9.2%. This is mostly the credit growth when we are talking about. Basically this credit growth has been there in the agriculture sector, which continues. The industry sector credit growth, as the economic survey mentions, is started to show some signs of improvement, started to go up, while service sector is still not shown much improvement in the credit growth, right? So that is about the banking credit growth that has been mentioned. About the asset quality and the status of the banks, the gross NPA has also improved to 6.9%. It has come down, and when we talk about the net NPA, it has come down to 2.2%. again, terms like meaning of gross NPA, net NPA, what is the difference between the two, these conceptual understanding should also be there for you. Then capital to risk weighted assets ratio, more commonly also known as CAR ratio, this percentage has improved, right? So going up is good, it is improving, it is the amount of capital that the banks have against their risk assets, right? So this is going up is a good sign, right? And the liquidity, because the monetary policy had been supporting, RBI had been supporting to ensure there is enough liquidity in the system, and that has been continuing. So that was the gist or the summary of the monetary policy and the monetary stance and the monetary standing of the country till now in the last year. There are other chapters related to price and inflation which I have not delved into here in detail, and also sectors like agriculture, food, industry and service I have not again delved into in this particular video, which are data heavy, and we will get a more we should read those sectors also in combination with the data and the schemes and the allocations that the government does for the budget. Moving ahead to another chapter which relates to the social infrastructure. So here there's been a highlight that the expenditure on the social services is increased to 8.6% of the GDP. Right. So some of the social infrastructure related sectors, subsectors that they have talked about is one about the employment in the urban sector and employment in the rural sector, because employment was badly hit because of the COVID. So there has been some recovery seen in the urban sector already. You know, this the source for that is the periodic labor force survey. And when it comes to the rural segment, the employment in the rural segment, the government had increased the allocation for the Manrega scheme. So in the budget, now this time we will also have to see how much do they allocate for the Manrega scheme for the next year. Talking about the other aspect to monitor the social infra is the education. So here in education, the government has seen an increase in the gross enrollment ratio in the higher education, right? So if you'll remember, 2 years back, the government had come out with NEP, National Education Policy, in which they had set certain targets for gross enrollment ratio, both at the primary level and at the higher education level. So there has started being some improvement, and it's currently stands at 27.1% for the year 1920. Another important point that they have talked about is the Jal Jeevan Mission, right? Har Ghar Jal is most commonly known as the Har Ghar Jal scheme of the government. Here also the government has been able to cover 83 districts in the country under the scheme. So this was another thing highlighted. In the last budget, the government had also allocated a good amount for this particular scheme. Let's see in this year how much they are going to allocate. So as I said, this is a small glimpse of some of the important topics where I found certain conceptual points are certain data that you can refer to for understanding, and based on these I have also certain practice MCQs here. So moving with the first question. The FDI limit in telecom sector under the automatic route stands at what percentage? So currently it stands at 100%. Last year, somewhere around September or October, this was increased. In September, October, as a part of the telecom sector reforms, the FDI limit, the investment limit in the telecom sector, was brought to 100% under automatic route from 49% previously. Next question. Last year, the government increased the insurance limit under the DICGC insurance cover. So it was initially 1 lakh. This was increased to 5 lakh. Now this can be refunded. This money can be refunded to the bank depositors within how many days, as approved by the amendment of the DICGC Act. So the correct answer here is 90 days. So the money has to be refunded in 90 days. Initially it used to go on for years. There was no time limit for it. Now the time limit has been set and at 90 days, and the amount has been increased to 5 lakh from 1 lakh. The Economic Survey 21-22 states that during April to November 2021, around rupees 89,066 crore was raised via 75 IPOs. IPOs approval is given by which of the following entities? So the correct answer here is SEBI. SEBI is the capital markets regulator. Okay, and they give the approval. So any company that wants to raise money from the public will have to first get the approval of SEBI before opening of an IPO. They need to file a draft prospectus. That prospectus is first approved by SEBI, only then it can be issued to the public for raising of money. So I was talking about the new education policy, which in the economic survey they have mentioned that there has been increase in the gross enrollment ratio for higher education. So as per the new education policy, what is the target for the gross enrollment ratio and by when has the government wants to achieve it, right? So here the correct answer is 50% is the gross enrollment ratio. So here in the economic survey they have mentioned it around 27% for 1920. So they are aiming to increase it to 50%, and by when? By 2035. Similarly for preschool education and secondary level, the new education policy aims to reach 100% gross enrollment ratio by 2030. Next question related to Har Ghar Jal state. Basically, when is a state called a Har Ghar Jal state? What is the criteria? So the criteria here is when the state will ensure 100%, that means all households in the rural areas have a functional household tap connection. That is when a state is known as a Har Ghar Jal state. What is the difference? So this is a question related to the monetary aggregates. Okay, this can be an important question for your SEBI exam, for your RBI exam, understanding what is M0, what is M1, what is M2 and what is M3. Right, so what is the difference between M1 and M3? M3 is the broad money, M0 is known as the reserve money, M1 is known as the narrow money. Okay, so what is the difference between the two? The difference between the two is defined by the time deposit with the banks. Right, so there are 4 monetary aggregates, M1, M2, M3 and M4. The differences between the two, what is included, all this should also be well understood from a conceptual point of view for the preparation of your upcoming exams. So that's all for this session. We will come out with a session for the budget also to discuss key points. You will get a PDF for this particular session in the description box, and a detailed summary for the economic survey will be available on the website of ixamBee very soon. So you can keep visiting the website to get the summary for both the economic survey and budget in this week very soon. Thank you everybody. Don't forget to subscribe to the channel.